Hello and welcome to Switzer Super TV. I'm Peter Switzer. This is my colleague Paul Rickard. Hi Paul.
Hello Peter.
Now last time we were together we looked at 2014, what happened. Now it's 2015. Let's shine the spotlight on that year ahead. What do you think is going to happen?
Well, I think there are 5 factors that are really going to put the stamp on our market. First of all, the impact of the US market, a lower Aussie dollar, the impact of lower oil prices, low interest rates and M&A activity. Okay,
let's go to the US. My view is that the US the economy will be growing over 3%. I wouldn't be surprised to see the S&P 500 up around about 10%. What's your story?
I'm probably not quite as bullish as you, but I think there's lots of room still in the US. I mean, you've got to just take a deep breath at it. Growth is really strong, interest rates are low. The chances of an interest rate increase will happen, but probably in the second half of the year. I think they still want to buy that market, so it may not be going for 10%, but I think we'll see a higher US market over the course of 2015.
And Wall Street up is good for us as well.
Well, very hard for our market really to make a lot of headway unless we get a lead from the US.
Okay, Aussie dollar.
Aussie dollar lower, we're now down around 80 cents, we've been calling it down. I think we're heading more around about the 70 to 75 cent level. But clearly the big impact for our market are those stocks that either have the majority of their earnings in US dollars or alternatively report in US dollars. Stocks like CSL and ResMed, I think we've got on the screen a couple of charts of that. They've done all right so far. I expect that in your portfolio you still want to be biased towards stocks that will benefit from a lower Australian dollar.
I agree totally. I think it'll go to 75 US cents. So the ones that benefit from 95 to 85, they should benefit from 85 to 75. Let's go to lower oil prices.
Well, it should be really stimulatory for our economy because they say the impact of that puts so much more money in each of our pockets. $30
per household per month because of the lower petrol price.
So without worrying about whether oil prices go up or down, let's just look at what consumers are going to do with that. So the take I have for our market is that maybe some of those so-called cyclicals, you know, the stocks that didn't do well last year, some of the discretionary retailers, companies like JB Hi-Fi or Super Retail, they may start to benefit from an excess sort of, you know, consumer spending. Also, some of the consumer staples in Woolworths and Wesfarmers could benefit from just the extra money people now have to spend at the shops.
Yeah, and I think a lot of small cap companies that have been ignored over the last few years, they'll benefit from lower lower oil prices and lower Aussie dollar. But let's go to the next one. I think they'll benefit from interest rates as well.
Yeah, the yield play's not over. That's the key take. Interest rates in Australia are on hold. Possibly some chance they could even go down, but I don't think there's any pressure from the Reserve Bank to put them up. And just as we've seen in 2013 and 2014, that the yield-based sectors, things like the financials, property trusts, utilities, led the market higher. My expectation is that the yield-based sectors will again do well in 2015. So no need to de-weight out of banking or, you know, telecommunications through Telstra or companies like that.
Okay, merger and acquisition, what do you reckon is going to happen there?
Pick up in 2014. In an environment of still relatively low growth in 2015, you've got to expect there'll be some more M&A activity. I know you're keen on the small caps. They've had a pretty awful couple of years. Maybe we'll start to see some of that performance simply coming through some M&A activity. I think there's going to be people looking for some bargains out there. Yeah,
and I also like the idea of playing an ETF for the index, because the index, you know, disappointed in 2014, therefore 15 should do well. And for the courageous, energy and materials had a hard year this year. They may well have been beaten up and they might come back a little bit next year.
For the courageous, I think the big picture is a higher market, and look at your sectors very carefully and think about some of the stocks to benefit from a lower Aussie dollar.
Okay, great stuff. Thanks for joining us on Switzer Super TV.